I had with the assignment was I just want to see more expansion on your analysis between the two companies. Most of you did it. Some of you could have done a little better on it. I mean, I wasn't terribly punitive, but try to, when you're doing something like this, remember what the goal is. And this is like not just my goal, but the overall thoughts here at Rasmussen. We want to teach you transferable skills. You know, that's such an important part. And it's one of the things I really like about this school. They put a priority on transferable skills. So what are transferable? First of all, I just want to make sure everybody hears me, right? Just if someone could just talk to me in the chat or something.
I hear you.
Okay, great. So what do we mean by transferable skills? Well, one thing is I have a lot of experience in the real world, right? That's one of the reasons why this has become a good part of my life here. You know, I'm going to be 66 in a minute, but I've done a lot of this. So what we want to teach you is when you get that job, when you get that chance to work with a client or with the firm or doing an analysis, that you do it in a way that's, that really stands out, gets you promoted, you know, get your recognition, which is what we need in the workplace. And the way to do that is to really, expand on your thoughts. So in terms of what my recommendation would be with the Target Walmart, and if you haven't done it yet, let's get that in because I have a bunch of non-submissions. If you've done it, great. You're graded. Is that you want to compare Target and Walmart, and you want to not just look at the ratios, but to explain what the relevance of those ratios are. And to remember something about ratio analysis, that it's not an absolute science. In other words, let's say I'm looking at inventory turnover. Well, on the one hand, I might say, well, and I'm just making this up, Target has a better inventory turnover than Walmart, you know? And that might say you stop there and you really haven't said much because really the reality is how much inventory are you carrying, and is that efficient? Because I can do much better on inventory turnover if I don't carry a lot of um if I don't carry, I'm recording by the way. I can do much better on inventory turnover if I don't carry a lot of inventory. Think about it. My denominator goes lower, mathematically it looks better. But we all know that a company needs to have inventory. I mean, it's really important. Without that, people come into your store or on your lot for buy a car or anywhere, and if they don't see enough inventory, well, you know what? We're seeing that in retail today. I was out last night with my wife, and she was shopping in the mall, and you see people doing more and more shopping online, and that may be one of the secrets of Amazon is that you can get more inventory there. Problem is you can't try this stuff on. So, it's a double-edged sword. And these are the kind of things you want to pay attention to in business. So let's look at a company like Costco, which has done very well. Costco only carries one of every item. And so on the one hand, the inventory turnover is tremendous because they only have the one item. In most cases, I think in like coffee or something, they might have more than one. But in most cases, they have the one item. But that could be devastating. I mean, imagine if you walk into your supermarket and you can only buy one brand of cereal. That wouldn't be good. Or one type of cake or just certain types of fruit. That's not you you get used to the stuff that they're selling. And in fact, you become more you become a better customer. You become a more returning customer. You're getting a better deal, you're getting more, you can feed your family, and you like the product. And I've looked at some of the products. They're pretty good. I mean, they spend a lot of time picking that one product. So that increases their inventory turnover without costing them customers because of the lack of inventory. So remember how important inventory is because if you carry the whole key with inventory, a lot of people think of the retail business as, finding the right thing to sell. And of course, that's important. But in a wholesale business, which is what really many businesses come down to, even if you're creating your own product, you're still basically a wholesaler. Someone's creating it for you, you're putting a spin on it, you're selling it. You have to make sure that you're not just carrying enough inventory, but you're carrying the proper inventory. And if that you hit that sweet spot, that's more important than what you're selling sometimes. Because a lot of times people just blindly walk through Costco. They got used to the products and they just buy the product because now they say, you know what, they've built that psychological connection to those products. And they say, well, this is a good tomato sauce or this is good cinnamon. Like I buy cinnamon all the time I make coffee in the morning. It's the generic whatever brand they carry, but it's a Saigon cinnamon. It's good, it's tasty. I don't really. So that's one example of the kind of thing you could bring up with Target and Walmart. And it never hurts to go further and look at what's going on. That's good, Chelsea. That's good, but that's good. That's what you're here for. That you don't have to, I'm glad that you said that. You're here to learn how to do that. And the other thing you want to do, not look, I'll give you a good grade if you covered all the requirements, but it never hurts to go to the papers, which I've been telling you this from day one, and read a little bit more about Walmart and Target. That's a good idea too. The other thing I wanted to bring up to give you another example of ratio analysis is something like, no, we talked about that return on assets. So a lot of times people look at two companies and say, well, one company has a much better return on assets without looking at the assets. So if the assets are old, of course you're going to look better. Your denominator is smaller, right? If I have assets that have been old for a while and they've been written down, my return on assets are going to look great. And believe me, if legally companies, some companies will, I won't say play with numbers. It's very hard to play with these numbers because you got Wall Street analysts that they've done this their whole lives. But don't confuse your good return on assets with a good number. Because if your assets, if I have two companies, so whatever their return is, no matter what it is, it's going to look much better. But I got to go the next step and say, well, that company, they're going to have to replace that stuff eventually. Plus, it's antiquated. Plus, it could break down in the supply chain where the other place has brand new stuff. So these are the kind of things I want you to not just appreciate, but put into your analysis. And that'll not just get you an A with me, because even if you didn't, I'm not going to kill you here. I'm generally speaking, I think the lowest grade I gave was a B, but you want to get these skills. You want it and always take it to the next step. And the next step, as far as I'm concerned, is reading the financial press. So make sure you do that stuff. It's really important. But like, remember what I said about inventory. In business, inventory is dead money. You have to carry the correct inventory, and that is a trick. That's why when you go to a supermarket, every person who checks out in that supermarket, that data is going into a central warehouse, database. And they're looking at when you bought it, what you bought, what products you bought with other products, what time of the day, what time of the month, what week of the day. They're looking at all of that stuff. That's what big data does. And this way is as these supermarket and demographics for different areas, you notice that and sometimes they may have different products based on people who have different religious denominations in different areas. It's all like if you read about the managers at Walmart, like if you're a manager down in, I read an article about a woman who was a manager down in Texas. She's got to carry deer feed, or she's got to carry stuff, that people deal with when they're down in Texas. You have to be able to respond to your customers on a more granular or micro basis, even though we think of Walmart as this huge retail behemoth, which it is. And even McDonald's adjust their menus, the pace depending on where they're selling in the on the globe or within regions. So, I remember being up in Maine once with a buddy of mine doing something for business, and Maine, they just got tons of lobster, and so and I love lobster. So I remember having a lobster roll. I don't know if you guys know what a lobster roll is. It's basically they take pieces of lobster and they make like a salad out of it, like a tuna salad, and basically, and they put it on a hot dog bun. It's phenomenal. But they sell them everywhere because it's so abundant. But they sell them at McDonald's too. Now I don't see any lobster rolls in my local down at McDonald's, but yeah, here in New Jersey, but they have it there. So yeah, so I want you to take away all of that stuff over there. All right, let's look at this week's work. I'm going to share my screen, and it's really great having you here. It really is. I'm glad that this class is going very nicely. By the way, any feedback on how do you like McGraw-Hill? Because that's new to us here. Everybody okay with McGraw-Hill? You're fine. I mean, I like All right. And you can even drop me an email so I can get some feedback for the school, how you like it. Okay. So you should be seeing my screen. You should be seeing our class basically. And I'm going to go to this week's work. And we're going to talk about internal controls and risk assessment. So it's basically about putting the audit controls in place, right? So internal controls monitor and control the company operations in its simplest term. Now, always read the chapters. Don't just use my guidance. Always read the chapters. This is accomplished by having an internal control system in place, which includes all the policies and procedures managers use to protect assets, ensure reliable accounting, promote efficient operations, and urge adherence to company policies and regulations. So, management's philosophy, first of all, the policy, they use management's philosophy related to the operations of the company. Keep in mind, and I know those of you who have been taking finance courses, you also have Sarbanes-Oxley, which happened after all the financial crimes in the early 2000s, where the senior management is responsible if they knowingly put together financials that are not 100% accurate or can be considered fraudulent. You'll go to jail for that. So that became so. Not only is it important to have these internal controls to watch your company, you want to have internal controls generally to make sure that the books and records of your firm are as clean as possible. And of course, in this, depending on the size of a company, not that, it would be impossible for 2 or 3 people at the top of the firm to know everything that's going on. That's just, I think even prosecutors would understand that. But they also are at this long enough, and believe me, a lot of the U.S. attorneys go to the best schools in the country, so they'll know when something is just, negligent, or just, benign but negligent, where it really was something you couldn't catch, and something that's more institutionalized and intentional. So the procedures, there should be procedures in place. Remember, every firm has internal auditors. They're watching the books and records and the details of the firm. They're also protecting against inside fraud. So you got this fraud triangle where you have the opportunity to do something wrong, because the systems don't catch it. You have the pressure because somebody has a gambling addiction or drugs or some sort of personal debt, and then they rationalize. So this fraud triangle is how a lot of the bad stuff begins, right, in accounting. So the only way you can prevent it is by having systems in place. And also, probably in my mind, I remember this is, I most of my professional life, I've done this for the last 15 years. And before that, I really basically ran a trading desk. So, or worked on a trading desk. So, it wasn't a retail business where, if someone to commit a fraud, obviously that could happen, but it wasn't like somebody could just steal money out of the accounts, because we would see that it's a trading firm. So I didn't have personal experience in it, but I will tell you, I mean, there are other ways you could do bad things, but I didn't have personal experience in that particular area. Like, this is more for an institutional business, right? But I remember that when I went to St. John's University, which is the largest Catholic college in the country, and it's out of New York City, and they were known for their basketball program, like any big college. St. John's basketball. I don't know if you guys are familiar with it. Anyway, years ago, and he's still alive. He's closing in on 100. This guy. His name is Lou Carnesecca, and he's a great guy. He's like a legend, and he was raised through the St. John system like me, and beloved guy, took St. John's to many successful years. One thing that always stood out about Lou to me, certainly, and to the players, because I knew some of the players. I mean, I played basketball. I didn't play for St. John's. I played in high school. But one thing that stood out to me was that in the beginning of every season, because, basketball is big business, and you can have players that fix games or do things that they're not supposed to be doing. He would have an FBI agent come in and explain the ramifications and the penalties for doing stuff like that. So I thought that was a smart thing to do too, because and the players that I know said, it really made an impact on them. Because once you hear it from the FBI, like, I don't want to go there. And St. John's is still a big program. It's a big East program. Back then, they were even doing better. They were like number 1 or 2 in the country, and he knew that that success will breed a lot of bad people. That's one big thing about success. Success is a great thing, but it also attracts a lot of bad actors because they see money and they want that too. They figure this is what was the old saying by there was a famous bank robber named Willie Sutton, and he had a famous line. They asked him why he robbed banks, and he said, because that's where the money is. And it's a simple thing, but it's famous because it makes a lot of sense. Wherever you see success and money, that's where the crooks are going to show up too. So you want to make sure your players knew that back then, that they didn't get involved in anything they shouldn't. So here in components of internal control, we talk about Sarbanes-Oxley, which ensures ethical and correct financial reporting. And as I said, if they have independent orders that have to evaluate the internal control procedures. So again, if something goes wrong and the opinion is not 100% correct based on COSO findings, COSO framework, let's go over that because you'll see that in your homework. One is you have to have a controlled environment, leadership, integrity, and commitment to ethics, right? So that has to start from the top, right? Where you have this integrity and commitment to ethics, and your career is based on this, right? Risk assessment, an ongoing process that analyzes the risks out there. Control activities, policies and procedures that mitigate errors and fraud. Information and communication, information about the environment, risks, and control activities and communicated up and down and across the organization, and a system that locates and evaluates the weaknesses within the system. So some of the things you want to have is the separation of duty. You should have somewhere along the chain, not everybody, like if somebody is taking in an invoice, a separate person should be paying the invoice, and yet a separate person should be approving those invoices. And maybe right up to the controller. You don't need the CEO watching every invoice. That's impossible in many cases. But you need enough people along the chain, enough checks and balances that they would actually have to be a conspiracy before there's a crime committed, right? So if you have a small firm and you have one person doing a lot of um, duties where they're also checking on themselves, you're asking for trouble, right? Because sometimes, you think of people who do fraudulent things as awful people, and you just saw by the fraud triangle, sometimes it comes down to people are just going through a very difficult time financially. There's a many number of reasons why people do things they're not supposed to do. And it's not always nefarious, but if you give them the opportunity, you may find yourself in a position where you're involved in something like that, and you don't want that. So you want to separate duties. Of course, good employees is where it starts. You have to train good employees. You have to keep an eye on the employees. If you think somebody is not 100%, you have to start to deal with that at one point. And we know we live in a time where it's not the easiest thing to just fire people, and you don't want to be in that position. You don't want to be draconian just because you suspect something. But then there are other red flags that are probably beyond the scope of what we're going to talk here. But that, if once you have a firm, you should be talking to people from the outside, maybe even if you know somebody in law enforcement that can give you some checklist of red flags that you have to look for, in people that would indicate that somebody might have an issue, or maybe needs, people weren't showing up for work on time, or maybe not looking 100%. I'm not sure. I'm not a criminal justice person, but the quality of your employees is important. You want to have a fidelity bond in place, and that's important, right? Because a fidelity bond at least protects you against, it's almost like it's an insurance policy is what it is. You have to make sure people take time off. And why is that important? Well, because if somebody is constantly at the firm and never taking time off, they may just be hard workers. That's not necessarily a bad thing. Sometimes people they live for work. Not healthy, obviously, if that's the case. But more important, it's a red flag because somebody's not leaving their desk. Maybe they're afraid that if they leave for a week, someone's going to detect something that they're doing that they shouldn't be doing. So you want to make sure that people take time off. You also have to have a very strict procedures manual. And that's something for those of you who have been in the military know how important that is, right? In the military, you have very strict manuals on the way things should be done. And it's a good thing, especially as your firm gets bigger and more institutionalized. You want to have a manual and a set of policies and procedures that dictate and guide how people should do certain, um, tasks and how things need to be reported. So a very strong and ongoing procedures manual has to be created. And I would say that generally speaking, you want to use HR. They could be pretty good with that stuff. That's usually their bailiwick, is to come up with a manual of things, not just because HR should be looking at stuff like that, but also because we expect them to um, we expect our human resources not just to keep an eye on things, but also to how can I say this? We want them to keep an eye on things, but we also want to make sure that what you're doing is also legally correct. You don't want to be just doing stuff that could create problems for you where you're overreaching. Establish chain of command, right? Who's in charge? Who do they report to? How do they report to them? Those things are important. Make sure you have pre-numbered documents. Keep track of which checks are out there. Don't you now in this day and age, a lot of stuff is done electronically, so that becomes a little easier. But you make sure that those records are accessible to people who are watching what's going on in the firm. Physical control. You want to separate assets, right? You want to make sure that assets are physically separated. Okay. And you always have these auditor reviews and these performance evaluations. And finally, you'll have to have some sort of limit on the control. So more information can be found on this website. You don't want to get an unqualified opinion or an adverse opinion, because if you see that, well, that can indicate that there's a problem out there. So the school takes a lot of time putting these classes together. If you want to learn more about this and how to create this and the guidance, it's right here for you. It's right here. Okay. Any questions on any of this? Any questions?
Not right now.
Okay, good, good, good. I know I cut out it, but I saw that. I didn't know what happened there. Okay, good. Thank you for the feedback. All right, so the purpose of internal controls is into losing any of these assets because of unethical actions by employees or customers. The amount of risk is not the same in every industry. Evaluating risk is also not the same in all departments. For example, a true separation of duties would have one person write the check, another person vouchers, doing the voucher, another person. Just as I told you, you want to have this separation of duties. You want to, that's such an important thing. Wherever you've got money coming in or out of the firm, or money being approved to come in or out of a firm, you have to absolutely make sure you have the separation of duties. You need the quality of the employees and you need these separations of duties. So I really think that's an important part. So this chapter in all, you're going to do a lot of and now let's look at the assignment. So this chapter is not terribly difficult. I mean, in the sense that a lot of it is practical knowledge. Once you get a hang of it, a lot of it's going to make practical sense, but it's a necessary part of the accounting curriculum because you need controls. Without that, you're off to the races. So you're an intern at a bank and you work with financial information. Employees in this banking area often explain financial concepts to their clients. One client has a specific question about an auditor's letter in an annual report. The client has written his questions. Your managing supervisor will likely respond to the client. For each question, write short answers and use complete sentences. Download the 2021 report for Target. You will use the same Target annual report for Module 2. Public company financial statements are also available in the annual report, usually found on the company's website under investor relations. This information can also be found in the merge. So you can use Mergent at this point. You should know how to do that. Download this Word document. The questions of the document are here. All right. So here's the Word document. All right. So just give me a minute. Give me 1 second. I want to call that up. Well, you know how to find it now, but just give me 1 second. But I lost it. Oh, I got it now. But let me download this thing. Wait 1 second. I have a paper here for some guidance. Give me 1 second. I'll be with you in 1 minute. I just have to call this stuff up. I don't want to, I have to go into my file, so bear with me. With me? I see some questions there. Oh, good. Oh, give me a minute. Give me 1 second. Any questions while I'm at it? Any questions, anything we learned this morning? Any questions at all while I'm retrieving this? Guys out there? Anybody?
No questions.
All right, excellent. Give me 1 second. I'm almost done. All right, good. I want to put my document in your work. So this way you have it. So just bear with me. Okay. I'm going to share my screen again. Ready? You should see my screen. And this is an example. So what I'm going to show you now is an example. But, just use it as an example and as a guide, nothing more. Guidance on week 4 sign. Okay, we're going to upload the file. Now I have it here somewhere. Okay, good. Okay, and we're going to save it. All right, so I think we saved it. Bear with me. Oh, I got it. Okay, now it's visible. All right, so let me share my screen again. Okay, we're on. And you should be able to see, do you guys see your class? Because I'm going to open up. So where you find it is you go into week 4, it's
Yes.
right. Okay, great. It's right here. It's the guidance. So let's give you some guidance on the week 4 assignment. I'm going to open it. Let's download it. So I'll make it easier for me. All right, so using the target annual report, answer the following questions, record your answers. There should be a reference page. Oh, wait, let me make sure. Do you see my Word document? Model for financial statement. Do you see my Word document? You guys see my Word document?
I don't see it.
No, I don't see anything.
Then let me make sure, because I know whenever I change, the reason why I ask is because whenever I change views, sometimes the document doesn't show up. All right, so let's take a look. Here we go. Now you should see it, right? Now you see the document?
Yes. Yes, I do.
You guys see it? You can let me know. It'd be a big help.
Yes, we see it.
Yes.
Great. All right. So what time period does the audit cover? So first of all, you find this, you're gonna download the same annual report you did the last project with. You're gonna record your questions on that template. You have to use APA formatting. I'll talk about that in a minute because some of you, I think, are not 100% on APA formatting. What time, now you can go right to the library. Our own library will give you good stuff on APA. What time period does the audit cover? Does Target use a regular calendar year? If not, what 12-month period do they use? Okay, so I'm giving you a little guidance on this one. Which accounting firm, because you want to know what period is if you're going to look at, compare it to other years, right? You got to compare apples to apples. Which accounting firms are independent auditors from, and when do they complete the audit? Okay, we know that it's from Deloitte and Touche, and they completed the audit on March 9th. Again, expand on this. Don't just answer my questions. What opinion did the auditors express? It was unqualified, but they didn't identify anything critically. Talk more about that. Read through it. Get an idea of why they did that. Don't just give me the answers back. What assurance level does the auditor give? That they do have effective internal controls, and it's standard practice, but you should go the next step and research those things. And according to the annual report, what is management's responsibility? Their responsibility, as we just learned, is to prevent fair presentation of financial statements according with GAAP principles, generally accepted accounting principles. Do a little research on what that means. Most of Target's revenues came from the sale of merchandise. Revenue is recorded at the point of sale, excluding sales tax, which is collected on behalf of the government. Revenue from gift cards is recognized when the gift card is redeemed, not at the time of sales. So those are all guidance for how you do this. Do not give me my answers back simply. The reason why I'm giving this to you is that A, it gives you guidance of what we're looking for, but I expect you to expand on this, give me more thoughts, do a little bit more of your research. Any questions on that? Any questions? So that's in your, that will be in your week's work, okay? Now I have something else. All right, and there's something else I want to show you guys because I see some of you having an issue. Some of you do real. And APA style. Now, this is one that I pulled up, and I could leave this here for you. So if you want general ideas on APA style, because you're going to get this over and over again in your academic career, so you definitely want to make sure that you're getting that information and you know how to create APA formatting. So I'm going to create a new message for all. Here is a great reference for APA formatting. Please also see our library, and I'll go to that in a minute. But that's a good one, okay? So, it's a very good one. So, go back. You could see here, that's right from where it comes from, the American Psychological Association. There's your style, and here's how the paper format should look like. You have order of pages. You have blogs here. Abstract text, references, footnotes. Mechanics and style, bias-free languages, grammar, references. A lot of you struggle with that. Your Word document will give you, when you use a Word document, you should be able to get that. You should be able to use APA formatting there, right? They'll give you examples. as to what it's supposed to look like a journal article reference, what it's supposed to look like. It's supposed to look like that. But when you go to, and you're not obviously going to be, doing peer review research here. We have to identify journals, but you got to know that at one point. So for instance, I want to make sure I'm sharing with you. Bear with me. Okay, here we go. When you open up Microsoft and you go here, references, you'll notice that you can pick the style, and there you go, APA. So if you have to insert a citation, you can add a new source, type everything in, and it'll give you it in APA formatting. And I'm not going to be, now, if you're doing more peer review research, if you continue your education career where you go to like higher levels in education, where you actually have to write theoretical papers and you have to cite journals, academic journals, there are a number of systems that will assist you with that. There's one called EndNote that I use. There's a bunch of them. And they'll allow you to download the paper's information, and then you just have to click on it and it goes right into the article. So it's not as difficult as it has to be. It's actually more difficult when you're trying to do this stuff in the undergrad level because you're not used to that stuff. But that's why spend some time with APA formatting, okay? That's going to help you. And then there's also guides online to how to put your Word document into APA formatting. So again, if you're having any issues with that, let me know. But I want you to learn that in my class because it's something that's absolutely necessary when you move on. Now, give me a minute. So use this and look at that because that's like the official, I would call it one of the more official documents in terms of APA formatting. Okay. The other thing you can do is go here to Books and Tools, and there you go, APA in Writing. So that's our own site. And there's writing tutoring, there's a paper review, right? Your first submission. So Rasmussen does a real good. There's your support form. So anything you need, you can even click on the support form and begin your analysis. All right, so really Rasmussen does a great job with this, but you got to use what you have available to you. So APA in Writing is here, right? Or you can go to library resources. It's all here for you. Okay, and we can go to research help, and it's all here. But you could use that they've really made it. Here's how to use Google Scholar, which is excellent to find papers. How do you use sources? A lot here. Literature Review Help, they do a great job. So make sure that you have that stuff by you, okay? Right. Well, that about covers what we wanted to do today. Any questions? The key word this week is going to be review. R-E-V-I-E-W, review. R-E-V-I-E-W, review. Any questions? Any questions? Any questions? Okay. I want to show you one other thing before we break today. So I think this will help you. All right, so this is something I want you to watch before we call it a day today. Did you guys hear this? Can you hear that?
I can't hear it yet.
You can't hear? Wait, hold on. Can you hear that?
No,
I don't.
Can
not
you hear
yet.
me? Oh, you still can't hear me. Okay, hold on a minute. Let me see if I can adjust this. Oh, here we go. Here we go. Okay, good. Now you should be able to hear.
Video presentation on the integrated
I can
framework
hear
for
it.
You can hear, it, right? Yes?
Yes, we can hear it.
for building strong internal controls in your organization. These 5 key components are part of the integrated framework
Can you hear that now?
Yes, we can hear
Yes.
it.
You got- Excellent. Okay.
developed in 1992 by the Committee of Sponsoring Organizations of the Treadway Commission, also known as COSO. The framework was updated by COSO in 2013 and is widely used and accepted across a variety of organizations and businesses as part of an effective financial management practice. To learn more about this framework, I would encourage you to visit their website at www.coso.org. This video will provide a high-level overview and key takeaways of this framework. This video is also part of a set of materials developed by OJP TFSC that focuses on internal controls. These materials include a short video on implementing an internal controls policy and a job aid checklist, also focused on internal controls. The links to these materials are posted in the description below. So, here are the 5 key components for strong internal controls. There are a few important things to note. First, the order of the components matter. Just as you cannot construct an office building without completing the foundation, you cannot skip steps in designing, implementing, operating, and monitoring this internal control framework. Secondly, the components should not be considered discretely. Instead, they operate together as an integrated system. These components are interdependent with a multitude of interrelationships and linkages among them. So, let's briefly go through each one. Number 1, the foundation for implementing effective internal controls within your organization starts by establishing a control environment. A control environment is defined by a set of ethical values, standards, structures, and processes that have a pervasive impact on the overall system of controls. Often stated as tone at the top, building an effective control environment is directly influenced by the ability of an organization's leaders and managers to embody honesty, integrity, and build an ethical corporate culture. Next is risk assessment, which is how you identify things that threaten the achievement of your organization's objectives. Risk assessment will require management to consider the impact of possible changes in both the external and internal environment that may render internal controls ineffective. At number 3, we have control activities, which are actions performed under the direction of management to mitigate the risks to achieve the organization's objectives. Control activities are performed at all levels of the organization and throughout all stages within the business processes. An example of an essential control activity is separation of duties, which ensure that no single person has multiple roles in an accounting process. Next, we have information and communication, which is the organization's ability to convey information needed to perform control activities. This flow of information ensures that personnel, both within and outside the organization, have a clear understanding of their internal control responsibilities from senior management and that these control responsibilities must be taken seriously. Finally, we have monitoring activities, which involve identifying policies, procedures, and practices that are not working and correcting any identified deficiencies. This involves ongoing evaluations built into processes at different levels of the organization. To help better visualize this integrated framework of internal controls, COSO has developed a 3-dimensional cube representation of the key concepts. The 5 key components, which I just described, are represented by the rows that go across the cube. The 3 objectives, operations, reporting, and compliance, are represented by columns. These objectives are what your organization strives to achieve. Operation objectives pertain to the effectiveness and efficiency of your organization's operations, including operational and financial goals. Reporting objectives pertain to the internal and external financial and non-financial reporting that encompass reliability, timeliness, and transparency. Compliance objectives pertain to adherence to laws and regulations that your organization is subject to. The organization's levels of structure are represented in the third dimension, allowing you to consider internal controls from individual, divisional, or operating units and/or functional levels. We know that organizational structures will vary across different types of organizations and agencies. The key takeaway here is that building and maintaining strong internal controls is a shared responsibility that cuts across all levels of an organization. Finally, I want to highlight the 17 integrated framework principles, which represent the fundamental concepts associated with the 5 components. You will see them listed out here, categorized along each of the 5 components. Because these principles are drawn directly from the components, your organization can achieve effective internal controls by applying all these principles. For a closer look at these principles, I would encourage you to review the handout by COSO. I have included a link to this handout for your reference in the video description below. In summary, the 5 key components of internal controls are needed to achieve the objectives of your organization. This system of internal controls will require the support of your entire organization to carry out their respective duties regarding internal controls. Again, I would encourage you to visit the COSO website to learn more about the integrated framework. As you can see, establishing and maintaining a strong system of internal controls is an involved process that will require everyone working together to achieve the mission and goals of your organization. Using the framework and other resources developed by COSO and OJP TFSC, you can create an environment and culture that supports strong internal controls. On behalf of the Territories Financial Support Center, I want to thank you for listening. Please visit our website at www.ojp.gov/TFSC for additional resources, or contact us at ojptfsc@usdoj.gov if we can be of any further assistance. If you would like to stay up to date on our videos, click the subscribe button.
Okay, so one thing I want to do before we finally break is I want to give you that what I showed you. I want to give you the if you want to watch it. If you want to watch it again for your own edification, for your own business, stay with me. Our classroom, and I'm going to go into week 4, and I'm going to put it there. Okay, and that should be right there. You'll see it. And I'm also going to send it out in a message. And this week's work, once again, is this week's word is obviously, oh, not obviously, but this week's word is review. All right, guys, that's it for today. Thank you for coming, and I'll see you guys next week. I will download this video into my YouTube channel also to make it easier for you to find. See you guys next week. You too, Chelsea. Thank you.